Elon Musk suggesting something that is a little bit more on the aggressive side, but it reiterates this. Now, while we talked about this on the jet yesterday, I just this morning saw Omar post this tweet. That's because he posted it at like 11:18 last night. But I thought it was incredible because it really aligns with this story.
Do you want to grow unit volume, in which case you'll have to adjust prices downward? Or do you want to grow at a lower rate or go steady? It's sort of a choice there. My inclination would be to still grow, as my bias would be to say like, okay, let's grow as fast as we can without putting the company at risk, which would mean, in that scenario, profits would be low to negative during a recession, provided the cash position is okay. I think that's still the right move long term, because there's also something that Tesla possesses that other car companies do not, which is extremely fundamental. That is that the cars are upgradable to autonomy, and arguably an autonomous car is worth many times what a non-autonomous car is. So even if your margins are extremely low in selling the car, the subsequent upgrade to it being autonomous is worth a lot. So, and that's something that no other car company can do. Only Tesla can do that.
Incredible. So, some things to break apart from this. First of all, what we talked about regarding FSD and the $20,000 vehicle aligns very closely with what Elon here said in his Twitter Spaces call about this idea that you can sell a car with little to no profit margin, and as long as there's some essentially take rate on FSD, you could still make a lot of money. You could still actually have phenomenal margins. Now, I did not like that Elon Musk suggested in a recession you could potentially go to no profit, or that was more okay because the FSD portion, but the part that's a little concerning is he said, or negative profit. That doesn't exactly send the good feels out to individuals betting that Tesla's going to be great for earnings reports going forward, right? There used to be a lot of excess demand for Teslas. You'd have to wait 6 months. And at least my thesis originally was that Tesla's excess demand wouldn't be absorbed as quickly as it was. The excess demand was really quickly absorbed by more production or canceled orders because of the recession and fears about people's wealth going down or whatever. And so, unfortunately, the backlog has evaporated for Tesla, right? And so you are in a situation where what Elon is suggesting here could be a hint of the future that, hey, look, we're going to have to sacrifice margin, at least during a recession. And again, on one hand, that's good because you're potentially taking a larger portion of the pie from other manufacturers while still making investments. Elon suggested as long as you've got the cash position to do that. He's been reluctant to buy back stock because he wants to make sure they have that cash insulative buffer to make sure they don't go bankrupt during a recession, right? That's worst case scenario. Instead, they're able to continue investing like we talked about with the Gigafactory expansions and the new Gigafactories. That's great. In fact, in a video that I posted maybe 2 or so days ago, and somebody actually sent me this. I forgot who it was, but whoever it was, thank you. So somebody sent me this. They said, Kevin, you kind of teased these price cuts coming. And it's like, well, yeah, I mean, it's logical, but let's listen to it from a moment. Is this video right at about 8 minutes and 40 seconds? It really is double and tripling down on these capacity expansions. It makes you think that Tesla must clearly have a path for so much demand in the future, or new pricing strategies that are going to induce that new demand in the future in order to keep these factories busy. Here you go. New pricing strategy is here. So now, how do we build all of this information into a valuation model for Tesla? Well, that gets a little bit more challenging. We're going to do exactly that, but it does get a little bit more challenging.